Well. The PSEI held on to life support and even managed to end the week on the positive. The question is this a dead cat bounce or is the worst over for the PSEI? Let's discuss. My name is Dan Slim and welcome to another episode of Monday Market Out. Last week, inflation in August ticked up to 1.5%, slightly above expectations, but still well within the central bank's comfort zone, keeping monetary easing on the table. The uptick was largely driven by rising food and health costs, though transport declines helped soften the overall increase. With core inflation climbing to 2.7%, policymakers may need to tread carefully, balancing growth support with early signs of underlying price pressures. Nevertheless, analysts predict that the BSP will cut rates this October before pausing in December to evaluate the next set of economic data for 2026. Looking at potential forward data, a quick look at government spending shows the usual seasonal dip during the second and third quarters. Now, seasonally, government spending should start ramping up in the next 3 months. However, with the Senate and congressional hearings on DPWH projects, this puts into question whether the budget will flow as usual or will there be a freeze in government spending in the next 3 months. According to Finance Secretary Ralph Recto, 70% of flood budget is lost to corruption. So could this be the reason why we've had difficulty hitting our 6% GDP growth rate targets? Now, the FTSE rebalancing. This September 19 will see AP added to the large cap index while MWC and SECB will be added to the small caps. Now, FGen will be deleted, so we could see some movements on these names in the next few days. The last day to trade will be on September 19, and the changes will be effective on September 22. A few weeks ago, a federal appeals court declared Trump's tariff unlawful, referring the matter to the Supreme Court for review. Now, this ruling has already introduced legal uncertainty and shifts in U.S. trade policy, driving renewed strength in gold. No? As a result, gold broke out of this flag formation to reach a new all-time high last week. If tariffs are removed, of course, cheaper imports could weigh on the dollar, further reinforcing gold's appeal as a safe haven asset. And of course, with the news, the DXY continues to languish along the 97.57, 98.25 range and could weaken further in the next few weeks, especially after the payrolls data last Friday came in way lower than expected at 22,000 in August compared to the 75,000 forecast. Just look at the last 4 months, a remarkable slowdown in jobs hiring in the US. Worse, June's addition was revised to the negative, the first monthly job cut since 2020. So analysts are saying that the Fed may already be behind the curve or may already be too late in cutting rates. Going back, remember, the Fed hasn't cut rates yet this year despite coming into 2025 with expectations of 4 rate cuts. Before the payrolls data was announced, there was a 99.4% chance that the Fed will cut by 25 basis points, almost a certainty. But after the payrolls data, economists went full rate cut frenzy with a completely priced in September 17th cut, and probabilities pivoted even to a 15.9% chance that the Fed might even cut rates by 50 basis points. So this induced a steep decline in the US 10-year yields, dropping 2% on the news alone, way past the support level at 4.127. The next support is a long way down here at 3.895. Of course, the 20-year yields and the 30-year yields also plunged on the news. Of course, when yields fall, the DXY also falls. The dollar index actually breached the 97.57 support level before rebounding back into 97.737. Now, the next level of support, if it continues to go down, would be at around 97.130 and 96.514. This resulted into the strengthening of the peso. Now, look at that rally for the peso ending the week at 56.66. And of course, this brings us to the highlight of the week, which is gold. Gold has broken out of this consolidation here. 3450 was the resistance and has rallied to 3586. Usually, the height of the consolidation here would be the minimum upside. So this gives us a measured target of 3750. However, some interpretations also say that the height of the rally here also represents the possible target for gold, which corresponds to the analyst's expectation of around 4,000 to 4,200. And even Goldman Sachs came out with a forecast for gold to hit 5,000 in the next few years. So really exciting times for gold. So let's look at some of our gold stocks. Apex Mining broke out of 710, 695 resistance area here. So the measured target, again, the height of this consolidation would be the measured target, which puts us at 8.42. So with the recent rally in gold, one can buy on momentum, or for patient traders, you could wait for a pullback here at 714, but it's not guaranteed that it will happen. Next, we have Philex Mining consolidating along the 7 pesos resistance area with, again, with the recent rally in gold. Philex Mining may retest the resistance area here at 735. OGP a bit overextended, I think, so this could consolidate for a pullback in time to wait for the 20 EMA to catch up. LC, really not one of my favorite stocks. It's a company that I do not want to speculate on. But among the 4 companies, my bet would be on Apex Mining, mainly because Apex is the real gold play among the 4 companies, because 95% of their production is in gold, while Philex Mining is just at around 43% and OGP at around 65%. So Apex Mining, for me, is the way to go if you want to ride on to the rally in gold. Now, last week, a lot of index stocks were on light support, as well as the index. The PSEI continued to even dip as low as 6082, actually breaching the 6,100 support. This may have been a gap fill movement, and the bounce and the subsequent gap up here may bring some hope to the markets. Now, best case, we rally towards the 20 EMA, where it corresponds to the June sell-off support, and then retest or another gap fill here at 6,100 for a higher low possibility. Now, worst case, we just got a technical dead cat bounce and we continue to 6,000. Now, at this point, I'd like to revisit the themes that we used for our investment positions coming into 2025. If you remember, coming into 2025, we said that Trump's trade will introduce uncertainty into the markets. And of course, with uncertainty, there was a potential for a gold play. And of course, also with the uncertainty, there may be a rotation into the defensive sector. With rate cuts looming on the horizon, property stocks will benefit from rate cuts, especially REITs, and the banks will have some headwinds when the rate cut cycle starts. Of course, being an election year, we also looked at possible consumer plays for the markets. So let's see how these themes have held up so far in the actual performance in the market. So if we look at the year-to-date performance of the PSEI's sector, we can see the clear winner here, gold. No? So the Trump trade uncertainty played out as expected very early in the year, but the effect on rate cuts is only showing its effects in the later part of the year. So I really underestimated how consistent Trump can be given the long consolidation here of the mining stocks, but apparently there was more to come from President Trump, which helped gold stocks break out of this long consolidation. But see here, despite the rate cuts, banks continue to rally at the start of the year, and with the condo glut, no property stocks lagged. But the stories may have shifted in the last 3 months. If we look at what happened in the last 3 months, we can see a clear deterioration, no, in the financial sector, while the property stocks continued to go up, steadily go up, with the mining stocks. The mining stocks were actually going down beginning August. Look at that massive rally in the mining sector. So the mining sector, the property sectors, and the industrial services sector outperforming the PSEI. Now let's quickly run through the charts. So we have Ayala Corp. Ayala Corp looking much better than it was last week. Good thing, 545 support seems to have held. Let's see if it continues its rally. A good time to buy for AC. SM also holding the support here at 744. So both life support stocks seeing some signs of life. DMC, a pullback after that rally here. GT Cap pulling back to the 50 EMA. A bounce here is a good buy signal for GT Cap. I'm a buy on GT Cap for this week. AEV still hanging on to dear life. JGS, a good bounce of the 50-day EMA. Also, possibly a good entry for JGS. It has rallied in the past months, so there's reason to believe that the rally may continue. If you enter here, the possible next target would be 25.55 and then 28.20. Let's see what happens there. LTG is still remaining strong. Dividend X date, September 8th. So this could pull back on Monday. AGI still hanging on to their life. Now, the property stocks, of course, rallying. Ayala Land, RLC, Mega World, FLI, all very strong price action, except, unfortunately, SMPH. SMPH still moving along the 25.50 to 21.80 range. At this point, there's reason to believe it might retest 21.80, even 21.15. Uh, of course, SMPH, more of a mall play rather than a property play. So right now, we have to be more patient with SMPH. The REITs have been very strong throughout the year. At this point, we are a hold on REITs. Of course, we've been telling everybody to get REITs at the start of the year. Now is a time to just hold on to them. Congratulations to REITs holders. So we're beginning to see our patience pay off. So of course, the banking stocks still going down. BDO breaching support level. Next level of support at 127. BPI as expected hitting 110. It's on life support and it may actually go down further. The next level of support 106, 103, even 98. Not looking good for BPI. Metrobank breaching the support at 70.15. Next level of support, I'm looking for Metrobank to go down to 67.25. Even the secondary banking stocks suffering from rate cut. Now, analysts are saying that 4.75 is the sweet spot. That's when we see the effects on rate cuts, and I guess those effects are starting to show, especially in the financial sector. Most of the banking stocks down in the last 3 months. ICT breaking out of this pullback here. This is a good buy signal for ICT. Limited upside, though the next target would be at 532. JFC pullback could be a good chance to enter. Pure Gold also pull back, a good chance to enter if it breaches 44.65. This is our consumer play here. If it breaches that, the next level of resistance is at 54.05. Just look at the gap. So Keeper also one of our consumer plays. Pullback here could be a good chance to enter, especially after this bounce. Monde again failed to break out. So there's reason to believe it could hit 664 in the coming days. Wilcon is a good surprise. We did a swing trade last week. We said possible entry here, stop loss, and it actually rallied way past our target price. Last week actually gave us an opportunity to enter at a better price level with a smaller risk ratio, right? So congratulations if you were able to enter Wilcon. This looks like it is going to break out of the 1040 resistance, and just look at the gap here. The next resistance is at 1294. Buy on breakout or buy on pullback. Wilcon looking very good so far. CNPF 3515 holding on to the support after the pullback here could also be a good chance to buy. Of course, the FTSE additions AP still going up. Manila Water pull back to 39 here, a good chance to buy Manila Water. Meralco still going nowhere. Espinex bounced from our support at 128. This is also a good chance to enter into Espinex. Globe, Tel, and Converge still languishing, still on live support. So coming into this week, my place would be GT Cap, ICT, Manila Water, Wilcon, Pure Gold Keeper. Wilcon looking very, very good. It might break out of 1040. Let's see what happens there. So let's go on to the S&P 500. The US markets hit another all-time high last week, but pulled back last Friday after the disappointing payrolls report, but still ended the trading day with a slight rally. Consistently, the US markets have rewarded by the dip. Investors, especially the dip last April. So will we have another buy the dip opportunity soon? Because looking at the historical average performance of the US markets, we are entering into the worst month for the US markets this September, averaging a loss of 1.2% for the S&P 500. Even the Dow Jones, the Nasdaq, and the Russell 2000 all traditionally pulling back in September. So there could be some opportunities in the coming weeks. If we look at this chart, during the years where August hit an all-time high and finishes in the positive, which is kind of rare actually, the average performance in the following month is negative at 1.57%. Even in the last few years, the pullback is at 3.92 and 4.76. For now, I mean, the US markets are still on an uptrend, and we have to consider what's actually happening versus historical data. No signs of weakness yet for the S&P 500, but something to consider coming into September. So this week we have the unemployment rate for the Philippines and the inflation numbers for the US. After the dismal payrolls data, next Thursday's core inflation numbers could move the markets, no? Especially if the numbers surprise to the upside. Also this week, 9/11 seems to be an emergency day. No? The circus will be back in town. Well, it never left. So here we go again. Or this may already be old news, but we'll see, right? So that's it for this week. Please like this video if you found the information useful. Please subscribe to the channel for more updates. And again, good luck on your trades. Please manage your risk accordingly. And I'll see you again next week. Bye-bye.